Before you get lost in the authentic Wall Street gibberish, though, what the heck would this kind of bounce even look like? Hey, why don't we go deeper in the S&P's daily chart for a recent example? You want to know what can happen when we get a cluster of these Fibonacci timing cycles on the way down? We were there just a few weeks ago. You had a bunch of timing cycles coming due from February 23rd and February 25th, when the S&P was getting pulverized. And sure enough, we caught a nice little bounce right on schedule. S&P made its low on February 24th, one day into Broden's timing window, and this was followed by a short-term relief rally, 302 points. Of course, it only lasted about a week before we started going right back down, but you can do a lot with a few decent sessions, as I said at the top, especially if you need to raise cash, which is what these spikes should be used for. Now, one big caveat here. I like to turn to the technicals when the market's going crazy because it gives us a quantitative framework, no emotion for valuing stocks. Normally, I prefer to judge stocks, though, based on the fundamentals of individual companies, what kind of money their businesses are making, and what people will pay for those numbers. But right now, we don't know what people will pay for anything. The market's still going through a gut-churning rotation. If you're under 30, think of it as a vibe shift. People tell me that matters. The old vibes are dead. And we're not sure what the new vibes will feel like. See, vibes for me were like xylophone. So let's take vibes out of the equation and just look at the patterns in the price action. According to Broden, these patterns mean there's a strong possibility of a rebound that lasts for at least a few days, not just today. What kind of possibility? Based on her work, when you see a cluster of Fibonacci timing cycles like this one, she says there's only about a 60% chance of reversal. 60-40 may not sound like much, but those are actually pretty good odds in the stock business. So here's the bottom line. The charts, as interpreted by Carolyn Broden, suggest that the S&P 500 is poised to give us a couple of days bounce, yes, over the next week and a half, with a real possibility that that bounce started today. However, she also believes it's a relatively short-term in nature, not a reason to buy stocks, but maybe a really good reason to reposition and get into areas that are more defensive and less dangerous. So lighten up into this.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.